Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show, where we are looking at how the market performed today and what we can learn from it and how we can plan for a better trade for January 3rd, Tuesday, 2023. So we had a consolidating market here today. All right, the market was dealing with resistance primarily. You can see the details in the analysis. So this is the first trading of 2023. Just before we go get into the daily charts, which we are focusing on, just before that, weekly charts. Remember that we had done a breakout and retraced and then taken a support and bounced up. That's what we are from a trend line. Let's get into the daily charts and then look at this candle. It's an inside bar, right? It's an inside bar inside the previous candle, which is bearish, and it's completely inside it, which means it's consolidating. The market is consolidating. That's what it's doing. Same with Bank Nifty also. It's an inside bar, greens, small body, smaller but not too small, but small, comparatively small real body, and that indicates that there is consolidation. There is little bit indecisiveness in all this, right? So that's consolidation is the primary meaning that you can make out from this candlestick pattern. But otherwise, we had a green day with 0.5% above, up move previous close, right? 92 points was gained in the Nifty, and it was 0.5% of 217 points gained in the Bank Nifty, right? So it's an inside bar candlestick. Intraday, if you see, it's 0.5% up move, and it retraced and managed to close above the previous days, not previous days, the same days, earlier morning high. It managed to close above that and close green. That's what intraday what happened, and it's 0.1% of move up and then retracement, and then so it's kind of volatile day as well. Bank Nifty, but good day move 0.88% and then retrace, and then could not move above the earlier high that was made in the day, but managed to close green with 0.5% gain. So 0.5% green, a slightly volatile day, and consolidation was happening. Volatile because of the resistance that it was facing. Hourly charts will clearly say what was happening. So you can see what is the price action that happened, right? Up move and then retracement and then up move, right? Same thing, Bank Nifty also up move, retracement and up move, but did not manage to close above the previous up move. It has happened in the early morning. So there was resistance. There's a clear resistance in the hourly trend line. If you drew, you can see that there is resistance there, and it's still at a resistance. You cannot say it has broken out because in both indices, Nifty and the Bank Nifty, both we are at resistance. It's dealing with the market is dealing with the resistance and then consolidating primarily. But there are positive things as well. It moved over the 50 DMA, and it moved above the 20 DMA of the Bank Nifty. So that's a good thing. CIP change in volatility bounce in the weekly is what is happening. It's in progress, you can say. And both indices actually is bouncing up from a weekly trend line resistance from where it had broken out, retraced, taken support and bouncing up, right? As we mentioned before. So it's exactly what is happening. And another thing to worry is that probably in the daily also, right? It's making higher high, higher low. So so if that pattern has to work out, it has to move above the 18,500 levels, right? So that thing has to happen, and so then that 18 look at this. Sorry, see lower high, lower low pattern could pull the price further down to make a new lower low. So this lower high pattern has to break, means it has to move above the 18 to not just 18,262. It has to break above the swing high, which is around 475. 18,475 has to be breached before we can say that the market is again negated the price action, which is bearish. As of now, price action has got this lower high, lower low pattern that is still valid. That's something you have to keep in mind. Support resistance levels are basically Fibonacci levels and the previous resistance and support zones. Previous swing lows being highs and all that, right? 262, 18,262 resistance upside, 18,442, 18,400, and And that's Fibonacci 38 retracement as well, right? So it's resistance upside 1871, 18,000 would be supports downside, and Fibonacci retracement as well as rounding number is there. 17,800 or 7951 is the support after that. For Bank Nifty 43,339 would be rounding, and 43,000 there would be a rounding number soon, which would have supports, and then 43,615 would be the support after that. This is mistake, it's support. And oh, so sorry, that's resistance actually. 43,400 and 43,615. So it's resistance upside, downside 43,961, 43,000. I'll just remove this one, create confusion. Sorry. So 43,000 nearby would be a good support rounding number as well as previous swing low, and 42,560, and there will be a support Fibonacci level as well, support Bank Nifty. The Bollinger Bands, if you see, you can clearly make out that it's consolidation. It's confirmed in the Nifty also. Bank Nifty had already clearly you can clearly see the bands straight sideways with bullish bias slightly on Bank Nifty, and bearish bias continues to be there because it's below the median of the 20 moving average of the median value of the Bollinger Band. So overall, it's sideways is what Bollinger Bands clearly indicates, and the price action also indicates the same. We are still not in a breakout because lower high pattern is still valid, and changing polarity bounce is positive, closing above these CIP changing polarity is positive, closing above the 50 DMA and 20 DMA on Bank Nifty. These are positive, so overall there is positiveness there, but side is what is happening as of now. So under that levels of 18,500 is clearly just can't be surely saying that no, this is the end of it. Right? Probably it can be a sell on rise. It can go up to 18,500 levels, 18,450, 400 that levels, and then retrace and make another low high. As I mentioned, that's a fact. That's something you have to keep in mind. Momentum is sideways and both, but sideways and rising as of today. It's not climbed into the bullish zones yet. So trend is a negative, bearish on the daily with a weak strength on the Nifty, and trend indicator radius is what's talking about. Bank Nifty it's bullish, and it's but bullishness is just weak and it's falling. So flat bullishness and weak bullishness and weak bearishness. So overall, you can say probably it's an indication that the trend also is sideways. Some cool off 1% is what happened today. 14.64. VIX did not do much, flat. And long building is what happened. The futures open interest, and 18,000, 18,200 remains DC with the highest put and call rating is 43,000 and 43,500 is where the Bank Nifty highest put and call rating support resistance let's see for the January 5th 2023 support levels, and 0.87 put call ratio is not bullish enough, but more biased towards the bullishness is what you can say. Moving on and seeing how the industrial sectors performed, except the pharma, all of them were green. Pharma just closed 0.30 percentage rate. Metal did well, 2.4% breakout. Reality did well, 1% up. Right, others auto and IT they closed less than 0.5% up, but they closed green. Right, so only the pharma is in trouble. Pharma and FMCG is in trouble. They both have the momentum short-term bearishness. All the other sectors are the sideways, and metal is actually into the short-term bullishness also from the momentum perspective. Heavyweights, all the major heavyweights closed green except Kodak Bank. Kodak Bank only stock that has got bearishness. Others are all at least in the sideways, and Nifty, Reliance, and ICC, Infi, all of them did greater than 1% of move. It happened. All this closed green, but flat green. Right? So overall green, you could say heavyweights, but momentum is less. Momentum is in the sideways, weak momentum. Institutional participation, if you see 212 was small selling again back. Fyers did big selling only on last Friday in the last 7 days. But it was 7 days continuous, 7th consecutive day of selling, and as usual, day is supporting and buying. 743, not big volumes are not there. Probably people are back, not institutional people are not back from vacations. But overall, domestic institutions supported the market and did not fall down and consolidated because of that reason. Crude oil is rising up, is the worry. It is less than near to 80 plus, just climbed 80 plus, but we had a pullback 44% in the top, and now in the parallel channel we are rising up. 2% up is what it shows as of today. So that's a worry. If the crude and the rupee weaken both combined, it could be deadly. It would be bearish basically. Right? So that's the case with dollar index. Dollar index is flat and bearish, which is good. 103.4, which is fine. But the rupee is not reflecting. The rupee is not gaining strength against the dollar, and still at the lower levels with flat close of 82.7. The rupee has to fall below the 80 at least for things to show positive from the currency perspective. Gold as of now is rising up and consolidating after a pullback, after a climb up into the above the resistance level. It's a cover handle medium term. Bullish momentum is what it is achieved right now. Gold, so it's a hedging instrument. The market is crashing, so gold is strengthened while the market is correcting by 6% over the last 2 weeks. This is green as of now. But using like this, it's a holiday today, and so people will come in only tomorrow, and then our markets will have the inputs on Wednesday only. So today is a holiday, so it was lucky Qs only that worked out today. US markets otherwise is in a reversal mode after hitting the wedge descending on weekly charts. It had shown signals of reversal on all. Nasdaq is in support zone, so all are sideways momentum, and it's slightly facing the resistance. At resistance, you can say Dow Jones is in the 500, and Nasdaq, all of them are at resistance and reversal mode. So you have to keep a close watch on that pre-market only on Wednesday. No data. So US holidays, January 2nd, the first day after the New Year is a holiday. PMI data is coming on Jan 3rd, Wednesday. PMI India data, and US data of jobs data is coming on Thursday, Jan 5th. So the events already could be anticipated at this outcome of this. Right? So two stock picks, REC and JSW Steel, both along. REC, the Rural Electrification Corporation, so it's some kind of power financing company from which is involved in the government. Let's look at the weekly charts to get a clear picture on what exactly it's doing. So it's breaking out. It's a look at that. It's a multi-year rounding pattern from 2018, and definitely there is a chance that it can break out. But towards the breakout move is possible because it has climbed and made a range shift on the momentum on the medium terms, and then there is every chance that it can at least attempt for that. That would be a short swing. After that, if you put a tight stop loss at the breakout zone candles low on the weekly, then you could get swing opportunities beautifully. But put tight stop losses because that's a place it has reversed multiple times. So be cautious. But this is a 52-week high that is hit and then heading towards a multi-year rounding pattern. So that's a good opportunity. Probably could work out. GSW still the entire steel sector is working well, performing. It's a rectangle plus a rounding pattern of at least 2 years. No, at least 1 year. So this breakout, if it is confirmed, and also there is a range shift that is confirmed on the momentum, which is bullish in nature. So if that breakout, the charges could be the size of this box. So rectangle pattern plus rounding pattern both combined. So that could work out, and then looks like a good opportunity. But put tight stop losses below the previous candle weekly. The entry has to be on the lower time frames, definitely. Right. Two stock picks, SWC and REZ both long. Now, after having looked at all the different parameters, analyzing the market from the charts, let's try to conclude that. So, what today happened was the consolidation. It's a continuation of the green up move, continuation of the previous week's bounce up, and remember that up move is following a retracement that happened from breakout zone, where all-time highs were hit with all the indices. So, this looks like it has taken the support at the same zone where it broke out yesterday, and they're trying to bounce up is what may be happening, right? But the price is less than the moving average. Bollinger sideways momentum trend is bearish still on the Nifty on the daily time frame short term. Rupee is still weak. Rupee is spiking. US market at resistance, and all of these combined, I still have a mild bearish view, and plus neutral. Cautious, mild, bearish, neutral is what my view is. I cannot be bullish until the momentum picks up a little more, or the price action shows that the lower lie, lower pattern is done with on the daily at least, right? So until then, it may be consolidation that may be happening primarily, but mild bearish is what the market will for the coming day. This is gold, but be cautious. You've seen how 2 weeks back shot up 15%, right? So 17,800, 18,500 are the levels to watch on the upside and downside in Nifty, and 41,500 and 43,500 accordingly for the Nifty. So all we have is our capital. So trade safe next year. Don't spoil all the gains for the worsen the losses that you made previous years. So trying to control the mindset and then put right stop losses, follow the system. Always have hedge positions, manage your risk if the VIX is spiking up, stay out of trade. All of this basic fundamental, and always have risk reward positive. 1.5 at least. That way we trade, with hedged neutral strategies of options. That's another way of doing it right. Always consistently build small profits. Right? So hope this had given you some overview on the first trading day of the new year. And wish you all happy new year. And if this has helped you in some way, at least this year, if you're not subscribed, please subscribe right away and then share it to your friends maximum. So we have very few subscriptions, as you see. I've been doing this since almost more than a year, or probably, yeah, much more than a year, and so many number of videos, but very few viewing them. So I look forward to have your comments, feedback, and inputs how to improve, with better quality content that could be helpful for you. So unless you comment and give me feedback and inputs, I would continue the same way. Right, and I'm doing this not just for you. I'm doing it for myself as an exercise for the next day, preparation for a trade for the next day. So it helps me as well. So, but in case you have suggestions, please feel free to feel free to put in the comments, and consider hitting the like button if you liked it, and share the maximum, and then subscribe if you're not. Right. Once again, thanks. Happy New Year, happy trading, happy learning, happy investing. Bye bye.